Good morning for the last trading day of 2014. It is December 31st, 2014. And what I want to talk about today is crude oil and the ETF USO. Okay? So now this is on my watch list because I'm looking for some type of movement to the upside. I think this move is very, very extended to the downside. And I'm not one of those people that say, "Hey, the market can only go so far, and it can't go any lower or it can't go any higher," because that's a ridiculous statement. Okay, all I'm saying is, if you've been trading the markets long enough, you know that a majority of the time the market reverts back to some type of normal or reverts back to the mean. In this case, in the way I gauge this is I look at my blue action zones, right? You've heard me talk about the blue action zone, the gray action zone, right? So what we've seen since this particular day is the market really pulling away from that blue action zone for an extended period of time, okay? Now, it's normal for the market to at least come back and at least touch it before resuming back down, as you see in this spot right in here, right? So look at what happened here. Market really pulled away from the blue action zone and then came back to the mean, right? Came back in that blue action zone before resuming to the downside, hit this low, came up, hit the bottom end of that blue action zone, resumed to the downside again, made a new low, reverted back to the mean, back in the blue action zone before reverting back down again and resuming the downtrend. Okay, so but look at in here, the market for a long time, over a month now, the market hasn't even come close to coming back in that blue action zone. Okay, so this is on my radar, and I'm looking for the market to pop back, to bounce back into that blue action zone. Okay, at least to the lower end. And so you've got a pretty big move to come back to at least the lower end. So at that point, when the market starts to approach the lower end of that blue action zone, that's where you can start taking at least half profits off the table and then moving your stop so it becomes break even. And maybe you get a bigger move to the upside. Maybe you get a bigger move. Maybe back up to the upper end of that blue action zone. Maybe it starts taking it out to the upside. So, I'm always scanning the market, looking for scenarios like the one I'm showing you here, looking for those opportunities for the market to revert back to its mean. So what I'm seeing here, especially in the last week and a half, all markets have been, the volatility hasn't really been there, right? The end of the year, people taking off. But what I'm seeing here is, well, first of all, let's look at, this is the crude oil futures chart. Let's look at the USO. So look at the USO, which obviously tracks the crude oil. Okay, so this is a good market to trade here. Same scenario. I mean, look at, if we flip back and forth, looks pretty much identical. Pretty much identical. Okay. So yesterday in the USO created an inside bar, a tight little inside pattern. So really what I'm looking for in here is I'm looking for a price pattern, right? Now you might ask, well, what price pattern? Well, you've heard me talk about these price patterns quite a bit, right? Either a bullish outside bar, right? Or an engulfing pattern, right? Where the high takes out the prior bar's high and the low takes out the prior bar's low, closes in the top quarter. That would give me a buy signal. That's one. Or you hear me talk about, I love when the market contracts, right? When we get an inside pattern, a tight little inside pattern, I like to look to buy above that high. So that's what we got yesterday. So it would be a very, very low risk trade. Now it looks like the market's going to open up a bit lower, okay? We closed at 2029 yesterday. As you can see here, about 6 minutes before the market officially opens up, we're trading at about $20.07. So we're opening up lower than this, okay? But that doesn't matter, okay? We are taking out, it looks like we're going to open up below yesterday's low, okay? And that's fine. If the market is able to rally up through $20.55 to, I would say $20.60, $20.65, that would be your buy. And then your stop would be below the lowest low on this chart. So whether it's the intraday low, if it makes a lower low than, let's say, the 29th low of $20.02, if it takes out that low and then rallies up and penetrates up through yesterday's high of 2055 to 2060 or 2065, that would be my trigger to get long at $20.60 with a stop below the lowest low that you see on the chart, whether it's the intraday low or the low that we saw on the 29th, okay? That's what I'm looking to do. But until the market penetrates up through yesterday's high, I'm not looking to do anything, okay? So if you closely take a look at this chart, look at where my risk is, okay? We'd be risking probably less than 65 cents on this trade. 65 to 70 cents would be the risk, okay? And our first profit target would be up at about 21.76 to 21.96, okay? So we'd be looking at about minimum $1.10 to $1.20, risking less than 70 cents on this trade. So it would be close to a 2-to-1 trade, okay? So at that point, you would want to take something off the table, move the remaining to probably just above break even, and maybe look for a bigger move to the upside, maybe to the upper end of the blue action zone, which is about 23.20, okay? So this is what I'm looking at, and those are the reasons why this is on my short watch list right now, okay? So hope that helps. Have a great day if you're in the office or if you're trading today. And definitely be safe tonight and have fun. And I'll be back with you on Friday. Bye for now.